Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. I'm starting off with the volatility index, ticker symbol VIX, because the VIX is a leading indicator, and if you've been following along with our weekly market reports, you'll know that the VIX is also inversely related to the S&P. And as I do each and every week, I leave my lines on the chart so you can see how well the forecast worked out. And this is one of those weeks where the markets worked out perfectly. And according to my forecast, the lines were just absolutely spot on. Last week, I said that the VIX would most likely drop at the beginning of the week and bounce off of this support level, which is the low from back in April, and I drew a horizontal, what's called the flatline support level, and that's exactly what happened. The VIX dropped just a tad on Tuesday, then Wednesday we had a big green candle, Thursday we had a higher high, higher low, although that was a red candle, and today we have what's known as a bullish engulfing pattern. Now, one thing I want to point out to you is that the CCI down here, assume my cursor is right there, is still showing upward momentum. It is not yet in the overbought category. That would be over 100. That would be that horizontal red line. And the stochastics is still showing upward momentum after it crossed with a buy signal back here on the 16th. Now, the upper line, which represents 80 on that scale from 0 to 100. Let me just condense that just a little bit so you can see that. These two parallel lines, the bottom one being 20, the upper one being 80, these are the levels that we use to gauge overbought, oversold, and once the stochastic starts moving up over 80, that would be defined as overbought. So right now, we are not looking for a reversal until these momentum indicators start to shift. So with all that said, what does that mean next week for the VIX? Well, I think the VIX will continue higher, just like that. And I'm going to leave that in there for next week so you can see how well that panned out. The end of the line is my target level for the VIX. So right there, it's going to be right around 1582. It might even go higher with all that's going on in the Strait of Hormuz, with Iran capturing oil tankers and with the U.S. shooting down drones. You know, we could very well be on the brink of war with Iran, and that would not be bullish for the market by any stretch. Maybe for the oil markets, but other than that, investors like peace. They like calm economies. They don't like surprises, especially when it comes in the form of tweets on Twitter. And so the volatility index, in my opinion, is going to go higher. Now, again, this is inversely related to the S&P. So if I hop to the S&P, we'll see a similar picture, but in reverse. Right here, as I zoom in, my lines were left in place from last week. I said early on in the week we would most likely rally and then pull back towards the end of the week. On Monday, we rallied. On Tuesday, we came down. Wednesday, lower. Thursday, lower, low, lower, high. Today, we closed with a bearish engulfing pattern. The end of this line is my target. We did not hit that today, but I do think we're going to hit it on Monday. A bearish engulfing pattern on higher volume with the momentum indicators still showing downward momentum. That is bearish, and I think that the S&P will move right back down to fill that gap. And right there where my cursor is, that's an open gap. Gaps act like price targets or price magnets, and 80% of the time open gaps fill. And so that will be my target right there on that horizontal line, at which time that gap, once it's filled, will then turn to support, because 80% of the time after a gap fills, prices reverse. All right, let's go to more broad-based index, which is the Russell 2000. Again, my lines are in place. Hit my targets precisely today. Right there, the end of that line is my target line for the Russell 2000. I said we'd move higher. We almost did that on Monday, but we came lower, as I said we would, in the rest of the week. Interestingly enough, the CCI is starting to pivot on the Russell 2000. So this might be a little bit different than the rest of the markets. I think that the Russell 2000 could actually bounce. Now that that gap is filled here, it could bounce early in the week, and then I think we're going to go lower. So with the S&P, I think we're going to go lower immediately in the beginning of the week, but the Russell 2000 being more broad-based, I think we'll see a little bit of a bounce and then lower prices towards the end of the week. If we look at the diamonds, it's a similar pattern. This is the ETF that represents the Dow Jones Industrial Average. You could see, again, my forecast was that we would go higher in the week, in the beginning of the week, and then lower towards the end of the week. We did that. We closed with a bearish engulfing pattern on higher volume. Stochastics is crossing with a sell signal on Wednesday. The CCI crossed with a sell signal on Wednesday as well. So that means lower prices. I think with the diamond, we are going to break down below that 20-period moving average. And I do not think this is going to hold as support. So I'm going to remove that right there and just give you a clean shot at what we're talking about. That's my forecast line for next week, with the end of that line for the Dow being 266.79. That's the diamonds. So that would be Dow 26,679 as my target for the Dow Jones Industrial Average, and the ETF is negative for next week. Now, if I look at the Qs, that basically represents the Nasdaq market, QQQ. We close again with a bearish engulfing pattern, not a small one. This is quite significantly large. When you see an engulfing pattern that engulfs almost 3 previous days of price action, that is significant. When it's on higher volume, it means that the bears are in force. When the momentum indicators are pointing lower, what does that mean? It means bearish signals all the way around. Now, there's a gap down here right at the top of this candle, which is going to be right around 187.15. I think that the Nasdaq could very well go down to fill that gap, and then we'll have to see whether or not that holds as a support level. So that's my forecast for all the markets. If you're interested in learning more about what we do at The Market Guys, just go to themarketguys.com. That's real easy. And this coming Monday, you'll see the link down here, on July 22nd from 8 to 9 p.m. Eastern, I have an open house Q&A session where I analyze stocks and I answer questions. Just click on that link. It's a free event. You just register to save your seat, and I will talk to you on Monday. And then one other thing I want to point out, at the end of this month, this is July now, at the end of this month I have one mentor spot opening up. It is first come, first serve. You do have to first find out whether or not you qualify for that. You need a certain amount in your trading account to make it worth your efforts. And I will save the seat for the first person who responds. Who that lucky person is, I don't know. That's a one-on-one coaching session that I have for 2 months. It's a 2-month program. I trade with you. You watch me trade. You mirror my trades. You look at my account. We use Skype. It's quite exciting, and I'm looking forward to filling that spot during this month. So we'll talk to you on Monday. Have a good weekend. Bye-bye.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.